Top three things in my notebook. The big stuff will go with Japan, number one. Number two, the U.S. bond market. And number three, the Russell 2000, which is, of course, the U.S. stock market. First on Japan, just an absolute train wreck last night. I mean, again, you get the dollar right. In other words, you get the yen right versus the dollar. The yen goes up, the Nikkei goes down. You can't be Captain Stock Picker in Japan right now. You have to have a macro view of what the dollar versus the yen is going to do because it has a 0.9 correlation to the Nikkei. The Nikkei, as you know, down 13% for the year to date, and we do not like it. Looking at number two would be the 10-year bond yield. So again, we are in tail risk mode for the 10-year bond yield, and again, that would be bullish tail risk for bonds and bearish tail risk for growth expectations. So again, 2.60% is our tail risk line for the 10-year bond yield. That remains very much in play. And again, no support to 256. And really, the intermediate term view here, if in fact 260 remains support throughout the summer months, is that you get something like 2.2 or 2.3 on the 10-year bond yield. Now, pretty much nobody is positioned for that. I think Jeff Gundlach might be, and he's also bearish on housing like we are, so fine. Two does not make a crowd. All of Wall Street is looking for higher bond yields, and they're looking for higher growth as opposed to the Hedgeye model. So again, just keep that in mind. And then finally, the Russell 2000. Like, I am sure I'm going to get another question on this on the call, but everybody's like, well, why won't the S&P 500 go down? It's like, enough already. Just short the thing that is what we want to be short, which is growth. Okay, growth. The Russell 2000 is down 8.3% from March the 4th. So in other words, if your broker or your friend or your person that's sitting beside you at your fund told you to buy them in early March, you got to be up almost 9% from there just to get back to break even. So what I think the major problem yesterday was that everyone went back to what they got smoked in. They doubled down. Now, when you double down into a mistake, that's called the second mistake. We don't want you to make the second mistake. Neither do we want you to be being longer in May. Buy in May and pray is not where we want you to be. The Russell 2000 remains bearish trend in our model, and we remain short of it in real-time alerts terms. So those are your top three things.